All right, so let's take a look at Chapter 7. Chapter 7, we get a break from all that break-even stuff and all those equations. In Chapter 7, we're looking at managerial decisions. Things that you would think of as like, should I buy a car or not? Or keep the one I have? These are the kind of decisions that we're going to be looking at. And to get an idea of how this impacts our net income, we're going to build these little mini income statements that show us the impact it will have. So for our first decision is to replace an asset or not. And we're going to look at, should we replace this? Or should we just keep the old one? And we're going to look at whether costs are relevant or irrelevant to our decision. For example, if we decide to replace an asset, what kind of revenues would that bring in? Well, if we do replace it, the old equipment could be sold for $50,000. But if we keep it, we're not going to have that income. So that nothing would come here in that keep column. Book value is a sunk cost. That is always irrelevant in our decision making. Next, let's look at some of the expenses we would have. Some expenses would include, if we bought this new equipment, it's going to cost us $75,000. That would be cash we would have to spend. So we would include that. We're also going to look at that, again, we wouldn't have that cost if we keep our old asset. We're also going to look at these operating assets or operating costs. What happens here? So it's giving us a cost savings of $4,000 every year. This asset, no matter what, it's going to last us another 4 years. So we're going to look at that cost over that 4-year period so that our numbers are comparable. If we replace the asset, it's going to cost us $12,000 to operate that asset for 4 years, or $48,000. Again, that's just that 12 times 4, giving us a grand total of a cost of $73,000 to buy a new asset. If we keep this asset, the only other cost that comes into play is that $16,000. It's going to cost us that much to run that asset for 4 years. A total cost is $64,000. Therefore, because, and then that's the total cost too, because there's nothing else going into that. So we would pick to keep the asset because it's going to give us some cost savings. Net cost savings is going to be the difference between the alternative of keeping it versus replacing it. Let's look at discontinuing a segment. In discontinuing a segment, we have to look and see which piece of our business, that's what a segment is, it's different pieces of our business. If one is not producing an income, should we immediately get rid of it? And again, we have to go through and look at which costs are relevant or irrelevant. This is where it's really important to make sure you read all those one sentence things that come with all the numbers, because here it's telling us that none of the general administrative overhead would be avoided if we got rid of this landscaping division. But salaries and liability insurance and salaries could be avoided, which means we have to pay that general overhead whether or not we keep this landscaping division. So let's look at that impact it's going to have on our bottom line if we discontinue that landscaping division. What would that look like? So that landscaping section, we would have no contribution margin because we have no revenue and no variable expenses. What we're looking at is those fixed expenses. Liability insurance, that could be avoided, so we would not include that. Salaries, again, could be avoided, so we would not include that. that general overhead, we'd have to pay that anyway. And that's $50,000, $50,400. So our total expenses we would have to pay is $50,400. Compare that to what we're currently losing of only $2,400, and we should definitely keep running that segment even though we're losing money. Okay, let's look at this next piece, this next decision. The next decision is accepting a special business. So say somebody calls you up and says, I really want to buy these from you. I'm going to offer to buy a certain amount if you give them to me at this price. What we have to really look at is, what is our contribution margin? How much do we have to make on these products to make a profit? And as long as we're making any kind of profit, we're going to accept that special business. So again, we're looking at what costs are relevant versus irrelevant. So if here we're talking about bracelets, I have to pull in all of those costs. My direct materials costs are $142. My direct labor we have to pay anyway, that's $82. And then we get to that manufacturing overhead. That's really where you have to read carefully. So it says $9 of that overhead is variable with respect to the number of bracelets produced. So as far as overhead, we're only going to include that $9, giving me a total cost of $233 per bracelet. Now, what kind of impact is that going to have on my overall net income? Well, even though I normally sell these at $401, I'm willing to accept a price of $361, which I think is what they wanted to buy them for. Yep. So my price is $361 per unit. That's how much they're willing to give me. My cost, $233 per unit, which gives me a contribution margin of $128. I'm going to times that by my number of units that they're willing to buy, which is 24. And I'm going to have to do some math here real quick. 128 times 24, that's 3,072. So my income will increase by $3,072. So I'm willing to do this project. The next decision is make or buy. Should I make a product or should I buy it? This one's pretty easy. So if you just look at it, I can make a product for $29.70. Somebody's willing to sell it to me for $27.70. By first class, you say, I should just buy this product instead of making it. But what you have to consider is that overhead. Remember those little one-line items in here. So it says that $10 of the fixed overhead would continue even if we purchase from the other seller. So really, the cost of making the product is still going to stay at $29.70. But the true cost of buying this product is that $27 plus the $10, giving me a total cost to buy the product of $37. So of course, I'm going to make the product. And our last concept in this chapter is to sell or process further. What we have to decide here is, in this example, we're talking about apples. Should I just sell them as apples, or should I process them further into applesauce and sell them for a different price? Remember, your joint costs are irrelevant to the decision-making process because those are going to get paid whether I pick the apples or whether I make the applesauce. So joint costs are always irrelevant. But let's take a look and compare our little mini income statements if I sell as is, which is the apples, or should I process further? First, we look at that revenue. The revenue, if I sell as is, I have 500 apples, and I'm going to get $2.20 per pound, which is $1,100. My cost at 500 apples is $1.65 per pound, or $825. For the total income, I'll write that down here. My total income, if I sell as is $275. Let's look at what happens if we process it further. Remember, these joint costs, we have to pay those either way. So really they're irrelevant in the decision, but I have to bring that over because my revenue is also going to be different. So my revenue here, I'm making $3.30 per pound. But it does say that 20% of the apples are eliminated. So I only get to use 80% of those apples to make applesauce. So I have 500 pounds to start with. I'm going to only be able to use 80% of that. So I'm really looking at being able to sell 400 pounds. So my revenue is 400 times $3.30, which is $13.20. I have those joint costs, but then I have additional costs I have to consider. That is that 13 cents per pound. But again, I'm only looking at those 400 pounds times that 13 cents, which is $52, giving me a total net income of $443. I'm going to compare where am I making more, processing it further or selling as is. I'm going to choose to process further. Hopefully this helps a little bit. This chapter people usually don't have too much trouble with, but if there's something in here that doesn't make much sense, let me know and I'll help you